Travis, today we're going to talk about a political showdown shaking investors' confidence.
Another one?
Yeah, another one. Last month, Bill Pulte, head of the Federal Housing Finance Agency, accused Governor Cook, Lisa Cook, of mortgage fraud. Mm-hmm. She improperly claimed 2 homes in a short period of time, one in Michigan and one in Georgia, as her primary residence.
Okay. I think that's the kicker. Yeah.
Yeah, and although no criminal charges have been filed, President Trump took these allegations, jumped on the opportunity, and on August 25th announced her being fired for cause. Mm-hmm. Okay, she's fighting back with the lawsuit, and she's fighting back with the lawsuit, but it's not just one person's job at stake here. It's the independence of the Fed, isn't it?
Yeah, that independence is important because if it erodes, markets, the economy, and even the dollar's global standing are on the line, like any confidence in the country, right?
That's true.
So as you said, the White House tried to remove Lisa Cook. She was appointed to a 14-year term.
Yeah.
Why do you think it's a 14-year term? I mean, you have to insulate these governors, right, from political whims that comes, just from a normal 4-year election cycle. So
that's right.
So what happened after that? It's what you would expect. Cook sued, arguing President Trump doesn't have the authority. And if she's ousted, the Fed's board would be evenly split now. I mean, you'd have 3 versus 3, potentially deadlocking key decisions.
Yeah.
I don't know if I'm on that side of the fence. I think Powell he obviously has the hammer here, and I think kind of knows where he's going. But all of this is happening, Steve, in the face of inflation kind of reaccelerating a little bit and slowing growth in the economy.
Right. Yep, that's true. And the Fed's independence is one of the most important features, Travis, as we know. Politicians, they think in cycles, political cycles, right? Where the central bank must think in decades of time, and that's
hope.
Yeah, absolutely. If monetary policy becomes a political tool, though, interest rate decisions risks being made to boost short-term growth rather than maintaining the long-term stability. Mm-hmm. It's just a recipe for higher inflation, weaker credibility, and then more volatility overall in our markets, which just is going to be painful for everybody.
Political figures are more interested in being reelected versus saying, well, this decision now in 10 years, what's the effect going to be? Because they're probably not going to be in office.
They probably won't be
Incentives aren't aligned there. So, Steve, long-term Treasury yields climbed past 4.25%. This week, and investors aren't just worried about deficits like some people are saying, like the fiscal deficits were running up. They're demanding a premium for just uncertainty. Yeah. Markets, what do we always say? Markets don't like uncertainty.
Right.
More uncertain they are, hey, the more you need to pay me, right?
That's right.
Stocks dropped as well. The S&P 500 fell more than 1% in a single session, which I think people get used to that, unfortunately.
That's been more of a trend.
But the names everyone loves, like NVIDIA and Broadcom, they're off more than 2%, which, from their particular levels, probably maybe is warranted for them to take a little breather here. But
absolutely.
Rate-sensitive growth stocks are feeling the squeeze first. On the other side, you've got gold surging past $3,500 an ounce, hitting record highs. We're probably going to see more gold commercials now, gold coin commercials. And
absolutely.
So it's a clear sign investors are hedging against risk, right? Government-driven risk, and they're seeking safety outside of traditional asset classes.
Yeah, Travis, this isn't the first time the Fed and politics have collided, right?
Really?
Yeah. In 1970, Nixon pressured Fed Chair Arthur Burns to keep rates low. Mm-hmm. Well, the result? Interest rate spikes, credibility collapsed, and it took Paul Volcker's painful hikes in the 80s to rebuild that trust, and it was painful.
Yeah.
He really got aggressive.
He had to crush inflation, and he did it.
He did it in one fell swoop. History shows when independence weakens, economies obviously suffer, and that's the cautionary tale investors are remembering right now as we go through this.
Yeah, you look back at history and kind of use it as a gauge for what to maybe expect. So What's next for the Fed? First, unfortunately, it's going to be a legal battle,
Yeah.
right? Cook's lawsuit could define presidential power over the Fed for decades. It'll be used as a precedent in future cases. Second, we're talking about the markets. The August jobs report and the Fed's beige book are coming up. If the Fed looks hesitant or divided, expect volatility in rates, in markets, because markets always seem pretty sure what the Fed's going to do. Then they just look for a little tweak in that verbiage, and it sends things going the other way, right?
Yeah, exactly.
Last and probably, maybe the most important, Steve, is credibility. If investors stop trusting the Fed's autonomy, the U.S. could face higher borrowing costs and even questions about the dollar's reserve status. I think those are far reaches.
Yeah,
but
agree.
It's out there, right? It's
It
out
is.
there, and you're going to hear about it in the news, and you're going to hear people talking about it.
The news will definitely pick that up because it'll catch people's eyeballs.
Really?
No. And so, Travis, if people have questions about current market conditions or how the political pressures might affect their portfolio, they need to call us. Just don't hesitate. Pick up the phone, give us a call, because we can help you navigate these waters.
Yeah, in uncertain times, you need a steady voice just to help you through it, right?
Absolutely. Travis, has been great. I look forward to it next week.
Look forward to it as well.